So we have this situation where AI is disrupting. We have this aging workforce. We have debt to GDP, to your point, extremely high, over World War II levels. And then what do we do about it? So we saw Elon Musk come in with Doge, or he's going to change the world. He left saying, okay, there's no hope. We can't cut spending. We have to grow our way out of it. Scott Bessent said we have to grow our way out of it. And now it looks like reindustrialization, drill baby drill, pro energy, and grow our way out.
Yeah.
I was going to say, and that doesn't happen without a bunch of government intervention and spending.
You're going to have to run it hot. You're going to effectively have to either explicitly or implicitly do some form of yield curve control, because otherwise interest rates are going to rise and more than offset any of your initiatives, right? So we've started to see the government appears to be cognizant of this, right? We've seen Bessent say it, we've seen Trump say it, we've seen Musk say it, and that sounds good, but they're still not saying the quiet part out loud, which is, who's the sucker at the card table that's going to hold the 10-year paper at 4% when we're growing the economy 10 or 12 nominally, or 15 nominally, with 5% real and 5 to 10% inflation. And there is no private sector sucker at the table that will do that. That will have to be regulated into, and we've been doing some form of that for going on 10 years in terms of regulating banks, regulating money funds, regulating pensions. Trump's 2018 tax cuts provided for a tax incentive for U.S. pensions to buy more treasuries. So they've been doing these kinds of things. But by virtue of the fact that debt to GDP is still higher post-COVID, they haven't worked. It's not been enough. It's got to be more aggressive. And so, yeah, I mean, it's ultimately about significant financial repression. Right now, we're sort of still in this bargaining phase of grief about it, that, we can grow our way out of it, and we can work really hard, and we don't need to crush bondholders, the real value of their bonds. And that's just a lie. Mathematically, it's impossible. So, but the challenge is, like, the second they say that, the bond market's going to revolt. And so they sort of need to try to boil the frog slowly while also moving more quickly, because, China's moving faster and the debt continues growing and AI is accelerating, putting more pressure on it. It is an unenviable situation in which they find themselves. And ultimately, I think it's, we started to see more volatility in certainly gold markets, other markets in recent weeks. I think it's a much more higher volatility sort of baseline, and I think it's really good for stocks. It's really good for inflation. It's really good for gold. It's really good for Bitcoin. It's probably continue to be good for certainly certain types of real estate, hard assets, and I think it'll be good for wage earners. But I'm not sure it'll be good for sort of white collar. I think might see a reversal of what we saw from 2001, from 1982 to 2020. I think the next 40 years might be really good on a relative basis, certainly for wage earners, skilled trades, engineers, etc. Even if they're prompt engineers, as it relates to to Chat GPT and AIs. But running it hot and repressing bonds is the only way out.
So it seems like that is the only option that they have, at least the only option that anybody's going to stomach or bear. But at the same time, it seems like, well, you mentioned that when we started that assets are basically at all-time highs. It seems like Bitcoin hasn't really been responding like most people think it would. Gold's kind of stealing the show. What's your take on that?
Yeah, I think it's, I'm of a couple different minds. My base case is that we've seen this pattern where sort of gold goes and then Bitcoin goes and then gold goes and then Bitcoin goes in the last few years, and I think it's maybe that. I also think part of it is, particularly amongst shorter term traders, Bitcoin is traded with NASDAQ increasingly in the short term, and the NASDAQ for a number of different reasons has kind of been range bound through much of the summer, and I think there are some there's reasons to be potentially secularly concerned with the NASDAQ or certain high-flying parts of it, right? Can China win in AI, right? Right now, someone showed me an AI leaderboard the other day, someone in that world, and they said, hey, for what it's worth, this is based on what are supposed to be objective metrics. top 10 AI platforms, half of them are Chinese, half of them are American, right? So like you're spending hundreds of billions of dollars in capital in this country to build that out. What happens if China does to AI in the NASDAQ what it's done to sort of every other industry in the US that it has attempted to do that to? I suspect some concerns around that, some concerns around the capital intensity, et cetera, are weighing on the NASDAQ. Some of the trade war has as well. So I think in the short run, some of what is holding Bitcoin back has just been that, that short-term view that, well, Bitcoin is just NASDAQ, a high beta version of NASDAQ, up or down. And so if NASDAQ's not ripping, there's no reason for me to get involved in Bitcoin. And, there's something to that. Over time, of course, if you go back 5 years, 10 years, they are still they rhyme, but Bitcoin has crushed NASDAQ, right? So, and I still think that'll be the case. But I think those are kind of, and I guess I would layer on one last one, which is, we're to the end of the 4-year cycle on Bitcoin, right? So, 4 years ago was end of 21. We sort of had that last little blip up into the 60,000 range. And then, 2022 was sort of, kicking the crotch after kicking the crotch for Bitcoin holders. And 2017 into 2018, same thing. 2013, 2014, same thing. So I think there's a lot of people that are very cognizant of that and are skeptical that it's different this time. And I think that's a reasonable view. So I think sort of the combination of all those three things are probably, drivers to the reason why Bitcoin doesn't seem to be responding. Let's see. I'm still seeing, I would feel a lot worse about Bitcoin sort of being range bound if I was seeing people telling me, what I'm saying, which is like, they're going to have to repress this thing so much, and there's no way they're going to be able to win against China without running this thing super hot. I'm not seeing that. I'm still seeing a lot of bargaining and wishful thinking and sort of, idea machine, as one of my friends calls it, right? It's like, well, we'll just, we're going to mine all our mines. It's like, okay, great. Where are you going to get the turbines? We don't know. Well, the lead time on turbines is 3 years. Okay, well, how about the permitting? Well, we're going to get that. That's normally 4 to 5 years. Oh, okay, well, we're going to build a rail yard into those mountains. Great. Where are we getting the steel? Where are we getting the welders? Where are we getting the engineers? Are we going to take them off the AI programs? Or are we going to leave them on the AI program and bring in foreigners that you just close the border on? So there's a lot of the idea how to do it. That part's easy. There's an executional side that is being sort of, smoothed over by Washington and Wall Street that I would sort of summarize as, other than that, how was the play, Mrs. Lincoln, right?
Right.
Other than the fact your husband was assassinated at the play, how was it? Well,
Great.
that's the whole friggin' thing, right? That's,
Yeah.
if you can't execute and put this order of operations together, so let's see how that plays out when it comes out. And I think it is a win when it comes out that this isn't going to get fixed in a year or 2 or 3 years or 4 years, that this is, hey, we're going to need to do 10 years of really aggressive investing in inflation. Look, if Bitcoin's down or doesn't do anything on that, that's probably going to force a rethink on my part and a lot of people's parts. But
Right.
until I see people telling me that, I remain bullish.
Well, to your point about it sort of trading with NASDAQ and looking at it as sort of like the speculative play, I mean, JP Morgan came out a few weeks ago and called it the debasement trade, talking about gold and Bitcoin being as the safe haven from debasement. So rather than sort of people looking at it more speculative, it seems like mainstream or TradFi is coming around to it being more of that safe haven asset.
Yeah, I think that's right. And, I think it's an important sort of signpost, as I like to call them, along the way of, we've gone from traditional finance saying it's, whatever, rat poison and whatever they want to call it, a Ponzi, what have you. Now it's part of the debasement trade. I think that's a huge step. I don't think it's far enough because I think ultimately where we are, there's no debasement trade. This is a debasement trend. We are into fiscal dominance. The Fed is running its first quasi-fiscal deficit, which is just a fancy way of saying operating loss, in its 110-year history. Once Brazil started running quasi-fiscal deficits, once Argentina started running quasi-fiscal deficits, gold and Bitcoin went from sell the rip, debasement trades, to buy the dips, debasement trends. And
Right.
I think that's sort of where we are, where there's still this view is like, okay, well, I'm going to have to get out and at some point and, sell Bitcoin, sell gold for dollars. And For trade, sure, but like, really? You want to sell gold and Bitcoin for dollars as we're talking like into this
Yeah.
setup? Like, why?
Yeah.
Like, it makes no sense to me. And so I think that's
Yeah.
still on the come. People will come to that.
I think of the book When Money Dies, and they talk about how people sold all their assets for dollars because they were at all-time highs, and at the end they burned the money in the fireplace that was worth less than the wood was. And so it's like you escape one system into the next. It's not a trade. It's like you're leaving one to the next. But you mentioned that the only real way out is through financial repression, stealing from bondholders. I think the largest market in the world is fixed income, over 300 trillion, about 145 trillion of that is fixed or securitized tradable fixed income. You have the demographics, so you have this aging population that needs that income. How much have you looked into what Michael Saylor's doing with the preferred strike, stripe, stride, and now specifically stretch by taking Bitcoin and stripping the volatility off of it and offering that digital credit, that yield off of the digital asset?
I've not looked into it a lot. I should. That kind of thing would make a lot of sense if you can sort of, engineer that into an instrument. That would be very good for Bitcoin demand, obviously, and would help people in that position, right? Where, because you've got retirees who own a disproportionate percentage of those 300 billion or 300 trillion, excuse me, or whatever bonds. And, the other side of that is, here in the U.S. alone, they're the ones owed $120 trillion in Social Security, Medicare, Medicaid, right? So you're making repressing them is making the people who owe the money. And yes, they've paid into it, but they haven't paid in enough for what they're taking out. Otherwise it wouldn't be blowing up. It's basically a tax increase on the people who are using the goods. The challenge is that, if they have to start selling stocks to pay for that, the stocks de facto back the Treasury market through the government receipt and the consumer spending. So that you can't have them sell down stocks to help fund that. You've got to keep all assets up or else the whole thing comes unwound. But yeah, in theory, something like that would help. I just haven't dug into it as much.
Yeah, I mean, we have a big problem, as you said, and they're guaranteed to lose money to be liquidated. And so they're going to have to find an alternative. So anyway, it's worth doing some digging into that. I think it's pretty interesting.
Hey, if you like this short conversation I just had, you're going to love the full-length conversation. Don't miss it. You can go ahead and click right over here, and I'll see you over there.